Microsoft stock has experienced a major pullback, but analysts still expect the company's earnings and revenue to grow strongly over the next several years. So, is the market warning us that Microsoft's growth story is weakening? Or has the pullback created one of the best long term buying opportunities in the stock since 2009? In this video, I will analyze Microsoft using its historical P/E versus forward P/E indicator, trailing P/E ratio, earning forecasts, historical operating income, expected revenue growth, and a regression model estimating where the stock could trade over the next 2 years. Let's begin with one of the strongest valuation signals in the data. The first indicator compares Microsoft's historical P/E ratio with its forward P/E ratio. The historical P/E is calculated by dividing Microsoft's average stock price over the last year by its average actual earnings per share over the last 4 reported quarters. The forward P/E is calculated using Microsoft's current stock price divided by analyst average earnings estimates for the next 4 quarters. The indicator then divides the historical P/E by forward P/E. When the ratio is above 1, Microsoft historical P/E is higher than its forward P/E. In simple terms, investors are currently paying a lower valuation for Microsoft's expected future earnings than they paid for its actual earnings over the previous year. Microsoft's current reading is approximately 1.4. That means Microsoft's historical P/E is around 40% higher than its forward P/E. This suggests the stock may be undervalued relative to its expected earnings growth. Looking back to 2009, every major move well above 1 coincided with or occurred close to a significant pullback in Microsoft stock. These signals did not always identify the exact bottom. Microsoft could remain undervalued for several weeks or even months before recovering. However, historically, elevated readings appeared during major long term buying opportunities rather than near major valuation peaks. The current reading of 1.4 is therefore an important signal that Microsoft's expected earnings may not be fully reflected in the stock price. The second indicator is Microsoft trailing 12 months P/E ratio. Since approximately 2018, the range between 22 and 25 times earnings has repeatedly acted as a valuation floor for Microsoft. Whenever the trailing P/E approached this range, the stock was either close to a major bottom or entering an attractive long-term accumulation zone. During the recent pullback, Microsoft trailing P/E briefly reached approximately 22 times earnings. It has since started moving higher. This does not guarantee that Microsoft cannot fall again. Stock can trade at an attractive valuation for some time before the market finally recognizes it. However, Microsoft recently reached the lower end of the valuation range that has supported the stock for several years. The next question is whether the company's future earnings growth supports a higher price. Analyst forecasts currently show Microsoft earnings per share growing significantly over the next 4 years. This matters because Microsoft's stock price has historically maintained strong relationship with its earning. Over shorter periods, price and earning can move in different directions. The stock can rise much faster than earnings when investors become overly optimistic, or it can fall behind when market sentiment becomes too negative. Over the long term, however, Microsoft's stock price has generally followed the growth of the company's earning. If Microsoft deliver the expected EPS growth, the company could gradually grow into its current valuation and support a significantly higher stock price. Microsoft valuation has declined, but analysts still expect its underlying earnings power to expand. Before moving to the next indicator, if you enjoyed the data driven stock analysis using historical valuation, earnings, and backtesting, please like this video and subscribe to the channel. It helps support the channel and allows me to continue producing analysis focused on fundamentals rather than short term market hype. Next, let's examine Microsoft operating income. Historically, Microsoft operating income has grown substantially and has maintained a strong relationship with the stock price. As Microsoft generated more profit from its core operation, the stock generally moved higher alongside it. Operating income is useful because it shows the profitability of Microsoft's underlying business before interest and taxes. It provides a clearer picture of how effective the company is turning its revenue into profit. The historical increase in operating income reflects the continued growth and profitability of Microsoft's major businesses. There have been periods when the stock price moved ahead of the operating income and other periods when it fell below the historical trend. But over time, the relationship between the two has remained strong. The recent pullback appears to have brought Microsoft's stock price below the level suggested by the long term operating income trend. That does not mean the stock must recover immediately. However, it provides another indication that the current price may be disconnected from the strength of Microsoft's underlying business. Revenue forecasts provide another important confirmation. Analysts expect Microsoft year-over-year revenue growth to remain between approximately 15 and 20% over the next 4 years. For a company of Microsoft's size, maintaining growth in that range would be extremely significant. Microsoft is already one of the largest companies in the world. Growing revenue by 15 to 20% annually would therefore represent a substantial amount of new business every year. Consistent revenue growth at this level could create a powerful compounding effect. It also means Microsoft may not require a major expansion in its P/E ratio to generate attractive returns. Even if the market continues assigning Microsoft a similar valuation multiple, the stock price could still rise as revenue and earnings continue growing. Finally, I built a regression model using the historical relationship between Microsoft revenue and stock price. Based on this model and current analyst revenue forecast, Microsoft stock could potentially trade between $650 and $850 over the next 2 years. This range should not be treated as a guaranteed price target. Regression models are based on historical relationship and those relationships can change over time. However, the model shows that Microsoft forecasted revenue growth could support meaningful upside from the current price. Bringing everything together, Microsoft currently has several encouraging fundamental signals. Its historical P/E versus forward P/E indicator is approximately 1.4. This means the stock's historical P/E is around 40% higher than its forward P/E, suggesting Microsoft may be undervalued relative to its expected earning growth. Since 2009, major readings above 1 have repeatedly appeared during important pullbacks and long-term buying opportunities. Microsoft trailing P/E also recently reached approximately 22 times earnings, near the lower end of the valuation range that has marked major bottoms since 2018. At the same time, analysts expect earnings per share to grow significantly over the next 4 years. Microsoft's historical operating income has maintained a strong relationship with the stock price, while expected annual revenue growth remains between approximately 15 and 20%. Finally, the regression model suggests a potential 2-year price range between $650 and $850. Microsoft could remain volatile, and none of these indicators guarantee that the recent low was the final bottom. But based on valuation, expected earnings growth, revenue forecast, and historical relationship between Microsoft fundamentals and stock price, the current setup appears increasingly attractive for long-term investors. The stock price has declined, but the company long-term growth expectations remain strong. And historically, that combination has often created some of the Microsoft best buying opportunities. Let me know in the comments where you think the Microsoft will trade 2 years from now. Thank you for watching and see you next time.